Okay, so waiting for the panel to sit. We're going to kick off. So my name is Alexandre, CEO of GLEIF. GLEIF is an organization distributing legal entity identifier around the world to identify legal entities. I will ask my panel to introduce themselves with the first question, actually. So can each of you briefly introduce yourself and share what you and your organization have been working on recently in the area of tokenized debt, equity, or funds? Starting with you.
So, good morning, everyone. First of all, thank you very much for inviting me to share this amazing panel with these amazing colleagues. My name is Andrés Fondevila, and I'm the head of blockchain and digital asset strategy in BBVA Asset Management and Global Wealth. And we are nowadays pretty focused on the tokenization of mutual funds, money market funds, and also alternative funds. We are exploring, we are developing, we are finalizing our integration with a private network, and we will go live with a pilot in a few months.
Thank you. John?
John Whelan, I'm the Managing Director of Crypto and Digital Assets for Banco Santander's Corporate Investment Bank. We and I are one of the old-timers in tokenization of assets on blockchains going back to 2016, really. We work across the full space related to digital or tokenized securities. I think that the big opportunity in front of large money center financial institutions relates to what I call digital collateral mobility, which means effectively tokenizing or automating the entire multi-trillion-dollar balance sheets of the financial institutions of the world. That's the long-run story. It's going to take 20 years to get there, so baby steps, right? And we've done other work on digital cash and crypto topics and different things. So happy to talk about any or all of it.
How long it will, it's the last question, how long it will take. Amparo?
Well, we'll all be retired by the time it happens.
Amparo?
Hi, good morning. I'm Amparo Garcia. I'm responsible for Securities in Europe. Securitize is an American company. It was set up back in 2017, and from then its role has changed from just tokenizing to managing the full ecosystem of digital securities. We've got licenses in the USA for transfer agent, broker-dealer, and ATS, and we're in the process of getting those same licenses here with the pilot regime and investment firm license. The largest milestones we've had is the issuance of BUIDL, which is BlackRock institutional money market fund, which is an absolute game changer, in the business. It has already $522 million issued, and the main beauty of it is its instant redemption and its capability to be moved across the institutional ecosystem.
David?
I'm David Creer. I'm the DLT crypto and e-money lead at GFT. I'm also an ambassador for Spain at the GBBC, so the Global Blockchain Business Council. At GFT, we do lots and lots of different things. We've been working in the tech area around DLT and crypto for about 10 years. And the most recent, I think, developments which are kind of interesting to this are around what we've been doing probably with the UDPN, so the Universal Digital Payments Network, where we've been tokenizing financial services instruments like bonds and then settling them with kind of central bank digital currency, but in pilots. So basically kind of like a pilot or POC central bank digital currencies, either centralized ones or decentralized ones, and connecting them to the network that we have. So that's quite an interesting thing. And then the other thing that we're starting to do now is and this is actually the first time this has been publicly spoken about, is we're starting to partner with Chainlink around how we use some of their services for the tokenization of things like funds, bonds, and all of these kinds of things. So I think maybe that second thing is something we're starting to do internally, but watch this space and it will kind of come out soon.
And last but not least, Thomas.
Thank you. I'm Thomas from Assetera, and Assetera is a fully EU-regulated capital market for investing and trading of security tokens. And I have to say that many people are using security token with the digital securities and blockchain-based financial instruments For us, it's all the same, as we have the 2 licenses in Austria, which we have notified throughout Europe, and are offering retail and professional clients the investing and trading of securities being tokenized. Currently, we are having tokens on the platform for trading, such as shares, bonds, fund units, and others like revenue participation. And we are currently looking at adding more token on the platform, as well as, and also on the buy side, cooperating with large wallet communities in order to kind of create the liquidity, which is certainly not there currently in the security token market.
Thanks. So I guess you're all working on digital securities or tokenized securities. So there must be a reason for that. So what are the advantages that you see tokenized instruments have over traditional form of instruments? Anybody can start. David, let's say.
I think one of the things is so I think it's 2 things, right? It's about kind of the security of the transactions that you have with the digital instruments. So everything that you're doing is going onto a ledger. Everything that how people are interacting with it is going onto a ledger. So that means that you have more security in all of these processes. That's potentially better for things like reconciliation and all of these very complex, let's say like settlement processes that you have with securities. Yeah, I think that's really important. But I think one of the most exciting things is how can you put instruments out to different secondary markets, right? So we're not seeing that huge amount, but there's potential there to be able to issue to one of the largest secondary markets in the world, right? The mainnet blockchain. And if that does happen in a way that's kind of regulated and secure, then you can actually maximize your secondary market much more than you would be able to do with a traditional secondary market, which is that we have at the moment, right? So I think those are probably the 2 main things that I would say are really driving this, right?
Okay, in my opinion, I think that it depends on the security that you are trying to tokenize. Obviously, technology should be agnostic to the security. So in my case, in terms of funds, I think that the scope or the approach of the entity is to, like BlackRock's one, a money market fund. Probably the best key benefit is to streamline other processes for other companies. In my case, I belong to a financial group. So in my case, by tokenization of money market funds, maybe we can use it as collateral in OTC derivative operations or repos. And if we decide to go through alternatives, as I have mentioned before, maybe the main key benefit, there are 2 main key benefits. The first one is providing potential liquidity to something that is illiquid by using or creating secondary markets based on blockchain. And the second one is to the whole management of the whole life cycle of the vehicle, in this case an alternative funds, even the issuance, the capital calls, pay of dividends, etc. etc.
Anybody wants to add anything?
Yeah, I think another thing that is also important is that this new way of managing the assets let us go into different sources of finance that is no longer available specifically for retail people. So with this technology, we can reduce the size of the tickets, and that way we can get access to retail people who usually do not get access to. So, for example, everything that has to do with commercial paper or reducing in the funds tickets and things like that are also important, because that way financing that usually comes from institutionals can also go down to retail people at a lower cost.
I think it's fundamentally about efficiency. So if you think about how assets are recorded in the various databases and core bank systems and securities broker systems today, they're very simple. They're recorded in an electronic database in a static form. There's your name, your account number, and a balance. And all of the business logic associated with what can be done with those assets are external to the database. Now, digital asset, you've got the name, the account number, the balance, and then all of the business logic about the life cycle events that can happen with the asset itself are encoded directly into the asset. So essentially, you've made the asset digital instead of electronic, digital and programmable. Now, if you also have at exactly the same time, the same possibility with the cash leg, you've effectively automated the entire pre-trade, trade, post-trade, life cycle opportunity for all the asset classes on your balance sheet. So the long run play is simply about efficiency. We'll move from complex networks of CCPs, central clearing parties, CSDs, central securities depositories, which today are responsible for performing the DVP, delivery versus payment of asset against the cash, to ledger, with cryptographic verifiability. When Santander does a $1 billion repo with BBVA, potentially we don't need to use CCPs and CSDs any longer. We can do ledger to ledger with very, very fine-grained resolution. No longer overnight, 2-day, 3-day, we can get it down to minutes or seconds, fully programmatically, probably run by an AI on top. That's the long-run play. It's about efficiency.
Thomas, do you want to add anything on that one? A lot of it's been said already.
Yeah, a lot was said. Maybe the market access for the clients, whether it's a private or it's a professional client. In our case, we offer direct access, so you're going to connect your wallet and you can run any kind of transaction on-chain with us. Even also the clearing and settlement is done on-chain with the atomic settlement. It's pretty new, and I think still there's a long way to go. And there was a panel before that said the next 18 months, even also institutional clients will be heavy traders, so actually participating in the ecosystem. I think we see 2-3 years down the road for the asset managers to allocate up to 10%, and even also for institutional on any function from tokenization to custody. We certainly need another 5 to 6 years till end of 2030 to have the wonderful what you said before, the ecosystem and ledger-to-ledger transaction, which is certainly the goal.
Just a quick note to Amparo's speech, because I think that it's important to highlight that even we are talking about maybe the democratization of the access to new markets because of the tokenization, both business models will play in the same way, because the same way they are tokenizing KKR or Hamilton Lane and make it more accessible to the clients, BlackRock One runs in the same infra. So it is cool, and I think that is important to, it's not a must, but it's a new possibility to have a new access to new markets and the democratization of the alternative, for example, alternative products. I think that is very important because both business models will play in the same way, in the same field.
So quite a few of you already touched on the fact that it's going to take some time. So what are the challenges actually that is impeding the mainstream adoption of tokenized or issuance of tokenized instruments, securities, and trading and settlement of those instruments? Maybe I can chart. You can start if you want.
Very quick, because we have too many people to talk about the challenges. In my opinion, I can summarize into the 4 I's. The first one is the institution. We need all the institutions on board in order to gain traction, to break frictions, and to make things happen. The second one is the infrastructure. We need an infrastructure, a maturity infrastructure, but with interoperability. That is the third I. And the last I is the insights, the education, insights, education. Large institutions, financial institutions, in order to gain adoption between or among institutions, we need to educate the top management, educate the people that is in the institutions in order to find the business case, in order to make understand from the crypto bros, from the Web3 companies to the very, very, very large and very traditional financial institutions. The business case, maybe it's not the business case like Michael Jordan saving Nike or the Simpsons saving the Fox, but there are business cases that we have to take into account, that we have to analyze, that we have to review. And for that, we need also education, and we need training, and we need to speak a lot, to break down too many doors, to obtain too many green lights, and it's about insights, about education.
Thomas?
One thing to add here is what we are looking at with our business model distribution and the secondary trading. We're looking at the standardization of the tokenization process per se, meaning there are a few companies out there who have certain standards on tokenization, but they're working with different blockchains and different financial systems. For us, the operation is sometimes a bit, I wouldn't say difficult, but a lot of effort has to be done. And even also on the identity would be useful, and to have an on-chain and also on a tokenization certain standards so that the distribution and the trading and the kind of liquidity everyone is asking for is definitely then kind of a matter of fact and timing.
Another challenge for me is the regulation itself and the regulators. As of today, we have no DLT pilot regime license yet, and there should be at least one after 18 months since it was available, and they're still growing the regulation with the guidelines, with the Q&As and so on. And unless we've got infrastructures that are able to operate, there won't be any distribution and there won't be any trading. So that's for me the first challenge we've got. And once we've got these infrastructures working, we need them to be able to operate at scale, which the pilot regime doesn't let us here in Europe. And that's an important element for me for the attraction amongst institutionals, because otherwise it's going to be only going to be a pilot exercise, a sandbox exercise, and institutionals are not going to be able to move its infrastructure into these new ones.
I agree with Amparo 100%. The primary challenge is regulatory. Normally, for mainstream securities issuance in most developed economies, the instrument itself needs to be first registered at a central securities depository, a CSD, in order to be eligible for secondary market trading and liquidity on regulated venues. That's simply not possible today with natively issued digital securities in the European Union, in the United Kingdom, or in the United States, right, which are the big securities markets. Now, the way to bypass that is to figure out how to take traditional securities, feed them into a system so they pop out kind of digital. It gives you a lot of the capability you can add to traditional securities. We've seen amazing platforms come into existence from our good friends at JP Morgan. JP Morgan Onyx does some of this, HQLAX, Fintium, Broadridge, and some of the other tools that are out there. So there are paths to get most of the benefit out of making your security a programmable digital object without native issuance. But in order for native issuance to achieve scale, we have to solve the regulatory problem. Any regulators in the audience? Let's see some hands. That's a zero. It's not enough.
Good one.
And the truth is, I don't think that they really understand the implications of doing this properly in a lot of circumstances. And it's not to say the regulators worldwide are not smart. They are, but we really need, I think, a deeper understanding about the power of this tech and where it can take the future of the financial industry. That's problem number one. And then problem number two is, as my colleague from BBVA just mentioned, is critical mass. If we want all of the financial institutions to play together, we kind of sort of have to be on more or less the same systems at the same time in order to be counterparts to each other's transactions. That will happen, but it's a slow process.
So I totally agree with what everybody said here today. I think these are all really valid points. I think also, as well as this, we have a kind of problem around education, right? So I think there's some people that even today think that blockchain is crypto and crypto is blockchain, and that's all bad because somebody's going to go and do illicit activities and buy guns or whatever it is, when it's got nothing to do with tokenized securities. So I think that's one part of education, but I also think it's about education as in what are the real benefits from being able to tokenize your securities, from a actual, let's get into the numbers of how much you're going to save as a financial services institution by doing it. So as John said previously, one of the main reasons for doing this is actually operational efficiencies, right? And only, we've worked on so many projects like this over the years, but only I think one or maybe two of the projects that we've worked on in the white papers that we've produced ourselves have we put we are saving X amount of hundreds of thousands of pounds in operational costs. And it's really those numbers, right, that are going to be able to make the C-level people kind of get behind it, put more money into this industry, and basically be able to really make a boom, make all of the, not just the really big financial services institutions that are already in capital markets, like Goldman Sachs or JP Morgan or even Santander, or the really, really big ones on the capital market side, but also the small players kind of get behind it and say, well, look, I have a limited budget, but I think this is worth investing in because it's going to be making money for me, right? In a significant way, not just in a small way.
Maybe one thing on the regulator. Like actually John questioned that there is no one from the regulator here today. Even also I can confirm that the regulators are smart and they are well educated, because there's a younger generation coming who actually also is growing up with the internet and the blockchain, and they are eager to learn and they are eager to support innovation on the one hand. On the other hand, they are certainly also scared in a way of they're going to give you a license and then the reputation is on them practically, because you're bankrupt and they have still the bad reputation, especially in Europe. When you look at all the other NCAs, then certainly this NCA has done it and has all the bad reputation. So also be a bit more, seem like a business partner, like we had to do in a way of going back and forth, explaining how we do it. They ask questions. So we had a lot of iterations. However, in the end, we kind of found a solution which is practical, which is doable for us, and certainly also they have all the necessary controls in place to make sure that they have, protect the investor at the end of the day as a main goal.
I'd say we've been working a lot in the regulated crypto, institutional crypto area, and I'd say that when we started doing this, the regulators really didn't have anybody who were actually crypto specialists at all. So they had people that were innovation specialists that were working with their teams who are trying to be able to help them understand crypto. And actually now they have crypto specialists who have been working in the industry they've brought into their teams. And it's really like night and day, like if you actually work with a regulator and they have somebody who really understands the technology, it's completely different.
And the good thing is they even have also some ideas how you can actually do a process, or how you can shortcut, etc. So it's worth talking to them.
Yep. So I used to work at Six Digital Exchange before joining GLEIF, and one of the challenge I thought we were facing every day was first the speed of change that banks are able to embrace. It's not necessarily a fintech, so there is a lot of bureaucracy and heaviness in the customer base that SDX has, for example, but also the fragmentation of platforms, because we're all creating our tokenization islands. We don't necessarily talk to one another. So an asset on Ethereum cannot be transported easily on Solana, cannot be transported easily on R3 Corda. And that's, in my view, one of the major challenges. And companies like Chainlink, for example, are looking at finding solutions for that interoperability of chain for assets. But in my view, one of the things that is also missing, and you mentioned it earlier, is identity, portable identity that can be used on multiple chains to permission the same company on multiple chains. So what if you have a view on that, and it's close to my heart because obviously I'm working in the identity business, is that a challenge, or it's a secondary challenge that will be solved over time? And I'm taking a risk by asking that question this way.
In securities markets, identity will apply, as we say in Spain, COC, yes or yes. That's it. There's no way to avoid it. Take Securitize ID. It's the starting point to access the Securitize platform. Nice platform, by the way. And certainly for a regulated depository institution like Santander, we're going to do the same KYC, know your customer, AML, anti-money laundering controls on you as a digital securities client as we would a normal securities client. The same applies. There's no way around it at all.
Yeah, I also think that is also important in terms of interoperability and knowing exactly what's going on in the whole of the system. Because one of the beauties of, for example, of the lei is that you are able to know exactly what are the positions a specific entity has in all the different markets and in all the different entities. And if we're able to build that also on blockchain, at least, without having the interoperability, we will have at least the information outside of what's going on, so the counterparty risk will be reduced. And I think that's an important element in terms of security within this market.
So I think like ADAS is coming, so it's digital, having your own verifiable credentials for your digital identity is going to be something that is going to be required, right? Or at least available for all of the banking clients because they are identity providers. So I do think it's a really important thing to be able to connect that to your digital securities. And why would you not do that if you have to the two things available. And yeah, we've been working in digital identity projects, and I see that most of the banks that we're working with have also got digital identity teams that are also trying to figure out how do we work with ADAS. Do we do just a more of a cryptography kind of approach to it? Do we use distributed networks like Polygon ID or Veramo? And how does that link into our traditional financial services, whether that's payments or securities or whatever it is? They're really keen to get those things linked up, right? So I think definitely, yeah.
So, thank you. On the regulatory side of things, we did discuss already that regulators or lack of regulation, or maybe the wrong regulation, can be an impediment or a challenge. So what could regulators do actually to reverse the trend and actually help and support the adoption of tokenized or digital securities or tokenized securities beyond the DLT pilot regime, for example? What else could they do?
Okay, now that I know that there is no regulator in the room, I feel free to talk about. Thank you, John. No, maybe they are, but hands up. No, the real thing is that at the end of the day, for me, for example, that we are global as Santander, we have different countries, different regulations, different implementation paces, and different approaches in order to make things happen in terms of tokenization or the use of blockchain technology in order to gain efficiency, create new products, new ways of distribution, new business models, etc., etc. And one problem is that, for example, in a very large institution such as BBVA, one principle is to build once and reuse many. And we cannot use it that nowadays with the regulation scopes, with different regulation scopes in different countries, because we operate in different countries, different continents, such as Latin America, Europe, Asia, and the States. So different approaches impact, and it is crucial for us. So sandboxes are great, but we need to jump over production. DLT pilot regime is great, Agora project is great, but we need to jump over production in order to have sensibility to see the real potential, to move from potential benefits to real benefits and talk about real benefits. And it's great because 2 years ago I was here and people in the room, people on the stage was talking about exploring the opportunity of tokenization. Now we are doing pilots, we are doing proof of concepts, but we need more pushing from regulators in order to move from pilot POCs to go to production.
Makes sense. Would MiCA lead to that production phase?
MiCA does not apply to securities. MiCA applies to crypto.
MiFID does, but...
MiFID.
Well,
So you can do it.
MiCA is narrowly formed really for more crypto-specific markets. For digital securities, at least from the point of view of a financial institution, the regulation that applies in Europe is MiFID II, and the equivalent regulations in the United States and Brazil and Mexico and everywhere else we do business. Forget MiCA for securities. Maybe there's a tiny, tiny little bit of overlap. At least that's the point of view that you will find in TradFi, large TradFi.
Any other?
I can just from our own experience, because we have a MiFID II license, and we thought it might gonna be useful to have a staged approach, starting to build a market with the tokenization, with tokens available, even on the security side, which is not that many, to be honest. And on the other hand, investors to generate the first liquidity, generate first market, and then move on, because the MiFID versus the DLT pilot regime is a regime which exists for many, many years. It's kind of notified throughout Europe, and it's stable. DLT pilot regime obviously is not that stable, or at least there are a lot of questions coming up. We also applied for the DLT. However, we are quite happy with what we have right now to come from a, whatever you call it, a license application to the production, because I can tell you, this step is a lot of pitfalls, a lot of things to be done, a lot of things to change till you're going to have the first product live.
two more ideas on my end. One is this is a very good opportunity to start thinking of globalization. And if we did it properly with this technology, we would be able to trade the securities on a more global basis than with the traditional securities. And we're not going to be doing that because we're not going to be even doing that in Europe. In addition to the regulation, to the European regulation, we've got national regulations. So the way we tokenize, the way digital securities are treated, the ERIR function, so that's everything that has to do with the management of these tokens and so on, is absolutely different from one place to the other. So for me, one of the things that the regulator should do is to start thinking of harmonizing the regulation and doing things in a way that works for all of us. That's one thing. And related to that, the second problem we've got is that even the pilot regime, for example, which is where I work mostly, the things that are provided in the pilot regime are exemptions that are only transitional vis-a-vis the overall regulation that the operators need to comply with. So we are, in the end, despite having a new technology which has different requirements, we still try to subset it into the traditional system. And until we are able to understand that this is something new that needs to be treated in a new way, we won't be able to move forward.
So I suppose, I'm not really a regulatory expert as such. I'm definitely much more on the technology side, as GFT as a technology service provider. I mean, I would say that, as you said, and this was said also by John and by Thomas, that at the end of the day, it's at this point in time, it's all about MiFID being compliant to MiFID, and to a certain extent, that just makes it clearer as to what you have to do. I think when you compare it to something like crypto, which is just like a completely different thing that hasn't been around for, well, it has been around for a while, but not in the regulator space for such a long time. People have an understanding of how securities have been traded over 50, 100 years, right? So it's very kind of clear how a security should be traded, what the rules are, right? So to a certain extent, I think it's kind of almost, it's kind of clear how it should be now, where you compare it to something like crypto, whereas actually that's a very kind of like, a very new market which is changing all the time,
So challenges on the regulatory side, but there are some good students, I would say, probably globally. So the next question is about what jurisdiction do you think is the most mature in terms of regulation, in terms of friendliness towards digital securities, and enables what you're trying to achieve more easily than others. I'm going to be biased. I'm going to say Switzerland because I live there and I see that happening every day, and it's effectively quite strong as a regulatory framework. But am I right? Am I wrong? Any other places where it's good to do business in the digital securities space?
We've done a lot of work in Hong Kong, Singapore, definitely those two. Just because, again, like Switzerland, regulators are very forward-thinking, get stuff done kind of mentality. Germany, also now, I think, there's a lot of regulation, but there's also a lot of people who want to get, very involved. A lot of people from the crypto scene are kind of going into financial services entities as well, and I think that's great.
Any other opinions?
I see a bit of a concern that in some regions, you have different regimes for virtual currencies and for digital securities. And if you're going to look in Dubai, under Nevada, they have all under one roof. So it makes sense under one roof because at the end it's a digital asset. We run our operations for virtual assets and for digital securities the same way. The same onboarding, the same compliance, the same AML, all the same procedures. So it's just another asset on the blockchain. So better have it under one roof, but in Europe we're going to have MiCA and MiFID and the daily pilot regime. So it makes sense to have it under one roof from an asset perspective, but to understand that we have two different regimes in Europe, the MiFID and the MiCA in place currently.
Imagine in the US it's sometimes 5 or 6 roofs that you have the regulation under.
Exactly. And different states and whatever.
In Europe, the best regime of all is Switzerland, hands down. FINMA in 2017 took a very pragmatic approach to crypto and digital assets in general. They said these are financial assets like any other, same regulations apply. You need a custody license for custody, you need a broker-dealer license for broker-dealer activities, and you need a banking license for anything that constitutes banking activities. And off you go. And we saw an explosion of neobanks and fintechs and existing banks in Switzerland get into the space. SDX, of course, launched a subsidiary of SIX. I think that if I could point to a learning opportunity, I think for regulators worldwide, it would be to look to the FINMA approach in 2017 and the simple level of pragmatism, which was, hey, these are financial assets like any other, regulations apply. And there are some modifications, of course, that they made. But worldwide then, things get increasingly complicated and fragmented. European Union is a very fragmented capital market in any case, with 27 different jurisdictions kind of under the umbrella of European Union regulatory umbrella, let's say. United States is quite complicated with SEC for securities, CFTC, Commodities Futures Trading Commission for commodities, FINRA for broker-dealers, and that's at the federal level. And then at the state level, you've got different regulators in different states that require different licenses for different types of activities, particularly if you're retail-facing, et cetera. And then there's varying degrees of complexity in different parts of the world. Or in some places, there's absolutely no complexity at all because there is no regulation, and you run into a roadblock, which is, as a financial institution, would be, we can't do anything because there's no guidelines at all for us even to navigate, let's say. But if I could pick top of list, I would agree, Switzerland, yes.
If I get back to your point on the pragmatism from the USA, you know that we've got the two legs, the one in Europe and the one in the USA. I think it's true that from a pragmatic point of view, they did it very well because they let them issue and do the things very easily in the USA in the very beginning. I think in the long run, the approach of the European Union from a theoretical point of view, from a systematic point of view, is much better. The things that we will be able to do here in Europe, despite the pilot regime in terms of the ticket sizes of the size of the markets, the size of the products, and things like that. If you think in the long run, the way it's being constructed makes more sense because what we are experiencing in the USA is that we can do everything, but in reality, it's not a digital security because it's not digitally native, whereas in Europe, the assets that we are issuing are digitally native. So we will be able to explode them in a much better way than the way they've got in the USA. And the payments leg is much more developed here in Europe than what they've got in the USA. And that will have problems in the long run for them if they don't act properly.
And usually we had the disadvantages because of US has been heavily and front running, but I guess the next 5 years we do have a good opportunity in Europe with the MiFID, MiCA, and the DLT pilot regime, and kind of develop the ecosystem, the market, with the protection also for the investor on the other hand.
Yeah, so I'm happy that you agree with Switzerland. By the way, next week we're celebrating the 10th anniversary of the Ethereum Foundation creation in Zug, my little village. So we will have a party with all the authorities of Switzerland coming and celebrating. That shows also how open that market is. And to go back to your comment about FINMA, I like that I've engaged with quite a few regulators in my life. FINMA is the only one where they don't, when you start saying, well, I would like to do this, they're not going to say, no, you can't do it because this and this and that. They're going to say, okay, it's a bit different. Let's find a way for you to do it in a compliant way. And that's the approach of, the proactive, creative approach of FINMA, and that is always very appreciated from the Swiss participants in that market. Crypto and securities accounted. So we have 9 minutes left. Perfect. We still have 2 questions, but that should be fine. So we have on the panel banks and also newcomers, I would say, in the field. I'd like to ask the question about what do you think tokenized securities, well, or blockchain maybe in general, will have in terms of impact on traditional players? So how are they going to evolve and how their services are going to have to evolve to be more in line with the new capabilities that technology is offering? I'll start with you because you are one of those.
I think that the impact should be huge, but we have to manage expectations. Because, for example, the first panel yesterday was about tokenization of funds 2025, the takeoff year. And the answer for the panelists were no. I think that it's a problem of meaning of what's takeoff is meaning nowadays, because takeoff could take just a few years or maybe 2-digit years of taking off in order to get to mainstream. But the impact, I think that should be great, should be huge, because in the first period of this impact, we have to maintain both infrastructures, because we are running our business as usual in one infrastructure off-chain that is, at the end of the year, what pay our salary, our bonus. So we are not going to touch that. And we have to build a parallel one, build on blockchain, that has potential benefits, but we don't really saw the benefits in our P&L account. So the impact should be incredible in terms of integration, in terms of IT integrations, in terms of education, in terms of way of doing things, business models. But I think that the journey from now to a target operating model completely efficient with blockchain will last maybe not 2-digit years now, because it's the same as I said 2 years before, but maybe about 9, 8, or 9.5.
Answering the last question already. So it's more like an evolution rather than a revolution in the work of banking. That's what you're telling me.
It's like a small-paced revolution.
I think
John.
I think I've said this already. I think the long-run destination is where the entire balance sheet of institutions, corporates, and individuals is programmable and digital. It just makes perfect sense, right? From a bank's point of view, that means that you have the ability to automate, theoretically, your balance sheet, significant parts of your balance sheet, and that should mean that messages, clearing, settling, reconciliation, boop, they all happen together. That should eliminate or dramatically reduce the amount of back office and middle office requirements you have. That's efficiency, as I spoke about earlier. And it's going to take a long time. It'll be a huge evolution, but the nature of so the demand for companies and people to borrow, raise money, whether it's debt or equity, to hedge financial exposures, that's not going to change. I think the nature of the securities and the assets themselves will remain more or less business as usual. But the entire value chain for the manufacture and production of those assets and securities, that's going to change. And it'll be quite revolutionary in the same way that the manufacture and distribution of content, video content, we still sit in front of a screen like we did 100 years ago, but how it gets to your eyeballs is very different than it was 100 years ago. And I think that's going to happen in financial services. But it'll be slow, because we have to run the existing BAU, business as usual, and they're plugged into large parts of economies. We can't just switch them off. So there'll be an evolution over time from the traditional world to what becomes native digital, I think. Take a long time. I laugh. I call it job security. It's going to take a long time.
So what is your long time? Like this, you can answer the last question of the panel. So you said 9 years. What would you say? 15? 10?
I was a floor trader in the trading pits in Chicago in the early 00s. And people had been talking for 25 years about how the trading pits would go away. It took 25 years for technology to eliminate them. I think this is a 25-year journey for the full financial industry, but there's a lot being done today, right? We shouldn't. There's all kinds of interesting things happening, from the startups, from the fintechs, from the neobanks, and also to the mainstream banks.
Amparo, on the impact on traditional finance institutions and maybe the time it will take for adoption?
I think it will. I fully agree with John. It will take us longer than we expect. I remember seeing Tom back in 2017, asking him on blockchain, because we were working together at that time, and he was the only one talking about blockchain at Santander at that time. It's been 6 years later. There are few more people talking on it, but it's not yet a reality. So if I take that into consideration, and I think that the technology can grow exponentially, but for the escalation to be done properly, I think less than 25 years is by no means.
Okay.
So I think, yeah, I think in terms of how banks will have to adapt, I think at the end of the day, they'll have to pass on these benefits to their clients. So that will mean that they'll have to try and pass on these operational benefits to their clients, reduce the price of the services, make them attractive to their clients. And in that respect, they're going to have to adapt to be able to compete with other, new startups in this area, right? So I think that's probably one of the things that's going to be interesting. And then obviously integration, we're integration specialists, integrating with banks who have 100 systems and extremely complicated to be able to do is not something that happens overnight. It's very, very difficult to do. There's a lot of politics are involved as well as technical challenges sometimes. So there's a lot of work that will go into that actually like, oh, well, if we're going to get rid of this system, what's the knock-on effect on this other system, right? And that's a big challenge. It's not like, oh, we just turn it over overnight. It really, there's a lot of planning and these migrations are not easy. And then, how long would it be? I mean, it's anyone's guess, to be honest with you. I think it's going to be a long time. I definitely agree with John on that. I think it depends on the jurisdiction as well. I think here in Europe, maybe 10, 15 years. But yeah, even then, it's like very early for everything to be switched across. I mean, I don't know. I don't have a very good crystal ball idea of how long it's going to take, to be honest with you, but a while.
Well, Thomas, if it's taking 10 to 25 years for the traditional players to get into that space, that's an opportunity for newcomers to take over their business, right? At the end of the day.
Well, next 15 years is a long time, to be honest.
Try to reduce the average, please.
But let me start from a different angle. I have been working for banks, and I do understand running two systems, all the necessity, costs, and there is little financial benefit now. But if you're going to split up the different processes, the different services, meaning tokenization, banks are already in tokenization. It's not a big deal if you have technology and you have a few people. Custody, it's not a big deal if you're going to run an existing, or if you have a software from an existing wallet provider. It's the same stuff like being a usual, as I said earlier, being a bank who is kind of doing the custody for securities. And more important, in between, you have the trading, the distribution of the security token. And in fact, trading on their own accounts and trading on behalf of clients, I do see earlier, depending on the offer we're going to make in kind of marketplace, in the ecosystem. And there are a lot of fund companies out there, just like BlackRock, Aberdeen, who are eager actually to see these products be distributed. So I think it's a linear development. I don't give any numbers here, but we see it step by step. It's growing, the market, and is it 10 or 15 years? I don't know, but in fact, financial institutions are totally necessary to get this up and running or get this flying.
Well, we're going to stop now. It's 20 seconds before the end, so it's perfect. We went through all the questions we had today. Thank you so much to the panelists for their thoughts. I think it was very, at least for me, very interesting to hear. I hope it was for you as well, and see you at a next event.
Thank you.
Big round of applause. Thank you, Alexander, Andrés, John, Amparo, David, and Thomas. Wonderful stuff.